Canadian investors love to invest in Canadian banks. And over the long term, they'd be money-making machines, pay a good dividend, and they're in a highly regulated industry as well. Over the shorter term, well, let's take a look. Maybe they're not such a great investment at this point. If we take, Canadian banks have a seasonal period from October the 10th until December the 31st. And here we're going to use the ETF that trades in Canada for Canadian banks, ZEB. We can see here that in that time period from October 10th until December 31st, we saw positive performance for the Canadian banks, and they outperformed at the same time the TSX Composite. The second seasonal period from January 23rd into April the 13th, which was last Friday, we did see that negative performance for the Canadian banks, but relative to the TSX Composite, we can see here that initially they did outperform the TSX Composite, and we saw this turn down relative to the TSX Composite, and in early April they brokered their their upward trend line relative to the TSX Composite, and they've been underperforming the TSX Composite as well. Now, so where does that leave us right now? We've just finished the period for a strong seasonal period for Canadian banks. And yes, they were successful in the fall time and initially in the second seasonal period, but recently the price action hasn't been good. A lot of investors at this time are taking a look and saying, well, perhaps the Bank of Canada raises interest rates this Wednesday, which is possible, but that may not be good news. If you take a look at what's happened over the last couple of rate rises, banks have not performed well in Canada because Canadians have an overheated housing market overall and highly indebted consumers. So rate rises transfers into higher loan costs and mortgages, which is actually a drag on the bank. So right now, we've just finished the seasonal period. We have a weaker technical picture. The Bank of Canada really isn't going to come to rescue the banks with higher rate rises because the impact may not be positive. And so, yes, NAFTA could be signed in the next few weeks, which would be positive for the Canadian banks, but it's not something you would actually bet the bank on, pun intended, of course. So here we are, banks. Great long-term investments. Right now, the technical picture is not the best for Canadian banks, and they've just finished the seasonal period. Something to think about. Thank you.